Ever feel like everyone around you's making money in crypto, but you're stuck on the sidelines? You're tempted to jump in, but let's be honest, crypto can feel like a total gamble. That's where crypto ETFs come in. They let you ride the crypto wave without the stress of crashes or hacks. In this video, I'm diving into the numbers, breaking down the top ETFs and answering the question everyone's been asking. Is this the smartest way to get into crypto today? I'll break down the biggest issues with investing in crypto and how the new crypto ETF models solve many of these problems. I'll show you 3 of the best performing crypto ETFs and how much they would return from a $100,000 investment over the next year. And in the end, I'll show you a crypto ETF that not only goes up in value but also pays a huge amount in dividends, combining to deliver close to a 50% return on your investment in a year. That's $50,000 on your $100,000. Crypto investing can feel like the financial version of bungee jumping. Exciting? Absolutely, but also terrifying. One minute a crypto's value is skyrocketing, and the next, it's plunging faster than you can hit refresh on your portfolio app. For most of us, that level of unpredictability isn't just stressful, it's paralyzing. It's not just about the roller coaster of prices. If you've ever tried to dip your toes into the crypto world, you know it's more complicated than it looks. Setting up a digital wallet, managing private keys, keeping your assets safe from hackers, it's like trying to crack a secret code while blindfolded. And it's not just about cyber protecting yourself. You have to watch out for scammers too. And the crypto space is full of them. From fake projects to pump and dump schemes, it's like the Wild West out there. Even the most seasoned investors can get caught up in a scammer's trap. Then there's the whole tax and regulation thing. Keeping track of every trade, calculating your capital gains, and figuring out how to report it on your taxes can make anyone's head spin. Plus, with governments around the world constantly changing their stance on crypto, it's like trying to hit a moving target. And then there's the emotional toll. Watching your portfolio rise and fall by double digits in a single day isn't exactly great for your mental health. So if you've been sitting on the sidelines watching your friends make and lose fortunes in crypto, listen, you're not alone. Many people feel the same way, drawn to the potential returns, but of course put off by the chaos. That's where crypto ETFs come in, offering a way to invest in the future of crypto without the sleepless nights. It's a perfect middle ground for people who want the benefits of crypto without the hassle. If you're new to the concept, an ETF, or exchange-traded fund, is basically a basket of assets that you can buy and sell on the stock market just like shares of a company. A crypto ETF, then, gives you exposure to cryptocurrencies but without needing to actually hold the coins yourself. The beauty of ETFs lie in their simplicity. No wallets, no private keys, no hackers. When you invest in a crypto ETF, a professional fund manager takes care of all the nitty-gritty details so you don't have to. But the real magic of crypto ETFs is diversification. Instead of betting everything on a single coin and hoping it doesn't tank, you're spreading your investment across multiple cryptocurrencies or related assets. Then there's the regulation factor. Since crypto ETFs are traded on traditional stock exchanges, they're subject to the same rules and protections as other investments. This means there's more transparency, less risk of fraud, and a lot less headache when it comes to taxes. And for those who aren't keen on the wild volatility of crypto, some ETFs even focus on companies involved in blockchain technology rather than the coins themselves. This gives you exposure to the industry's growth without the same level of risk. Now, I know what you're thinking. This all sounds great, but how much money can I actually make from this? That's the million-dollar question in this case. And I have an answer for you in the form of the 3 best crypto ETFs which have performed better than others since last year and are all managed by well-established companies. So let's see how much return you could see from investing $100,000 in each of them. At number 3, I have CoinShares Valkyrie Bitcoin Miners ETF with the ticker symbol WGMI. First off, you have to appreciate the cleverness of their ticker symbol, WGMI, short for We're Gonna Make It. It's practically a rallying cry for crypto enthusiasts. But this ETF isn't just about catchy branding, it's about real-world exposure to one of the most fascinating and essential parts of the crypto world, Bitcoin mining. Bitcoin mining is the backbone of the entire Bitcoin network. Without miners, transactions wouldn't be validated, and the network would come to a stop. What makes WGMI unique is that it allows investors to gain exposure to this critical part of the Bitcoin ecosystem without having to actually own Bitcoin or invest directly in mining operations. WGMI is heavily focused on companies that mine Bitcoin or support Bitcoin mining operations. These companies include some of the biggest names in the space, such as Marathon Digital Holdings and Riot Blockchain. What's fascinating about these businesses is that they're not just mining Bitcoin. Many are turning to renewable energy sources like hydroelectric and solar to make mining more sustainable. This makes WGMI not just an investment in Bitcoin, but in the future of green energy innovation within the crypto space. But concentrated Bitcoin holdings can be a double-edged sword. On one hand, it means that when Bitcoin prices rise, the ETF tends to rise even faster. On the other hand, the reverse is also true. If Bitcoin prices fall, WGMI might take a steeper hit compared to more diversified ETFs. This makes WGMI a bit riskier than other options on this list, but for those who are bullish on Bitcoin's long-term prospects, it could be worth the gamble. Performance-wise, WGMI has been impressive. Over the past year, it delivered a 27.27% share price appreciation, which means a $100,000 investment would have grown to $127,270, netting an extra $27,270 in your portfolio. Not too shabby, especially when you consider that this return comes without the hassle of managing digital wallets or worrying about cybersecurity threats that come with directly holding Bitcoin. In the end, I will show you a crypto ETF that not only goes up in value, but also pays a huge amount in dividends, combining to deliver close to a 50% return on your investment in a year. That's $50,000 on your $100,000 investment. One thing to keep in mind is that Bitcoin mining isn't without its challenges. The industry is heavily scrutinized for its environmental impact, and regulatory changes could pose risks to some of the companies included in WGMI. However, many of these businesses are ahead of the curve, adopting greener technologies and even forming partnerships with renewable energy providers to future-proof their operations. Now, in second place, we have Schwab Crypto Thematic ETF with the ticker symbol STCE. This ETF takes a thematic approach to crypto investing, meaning zeroing in on companies that are shaping the future of blockchain and digital assets. As for its holdings, it has everything from supply chain management to financial services and even healthcare. At the top of the list is BitDeer Technologies Group, which makes up 7.96% of the fund. This company focuses on Bitcoin mining infrastructure, offering exposure to the operational backbone of the cryptocurrency networks. Next up is IREN Limited at 7.12%, followed by Hut 8 Corp at 6.89%, one of North America's largest innovation-focused digital asset miners. Well, let's talk numbers, because STCE's performance is what truly sets it apart. Over the past year, this ETF delivered a 43.61% share price appreciation. To put that into perspective, if you had invested $100,000 in STCE at the start of the year, your investment would now be worth $143,620. That's a staggering $43,620 in capital gains. So what makes STCE a standout choice? One big reason is its focus on innovation. The companies in this ETF are shaping the industries they operate in, with mining giants like Cipher Mining and trading platforms like Robinhood Markets. STCE gives you a front row seat to the movers and shakers driving the crypto economy forward. Another major strength, diversification. Unlike ETFs that focus on just one niche, STCE spreads your investment across a wide range of sectors, geographies, and blockchain applications. For instance, CleanSpark offers exposure to energy-efficient crypto mining, while NVIDIA Corporation represents blockchain's integration into cutting-edge technology like AI and GPUs. By casting such a wide net, STCE helps reduce the risk of big losses in any one sector while capturing the broader potential of blockchain. Then there's the credibility. As part of Schwab's lineup of investment products, STCE comes with the backing of one of the most trusted names in finance. Schwab's reputation for reliability, transparency, and professional management means you can feel confident about where your money is going. Now let's talk risks, because no investment is risk-free. While STCE's diversification helps cushion some of the volatility that comes with crypto investments, the companies it holds are still impacted by the overall sentiment and regulatory shifts in the blockchain and crypto space. Blockchain technology, while promising, is still evolving. There's always a chance that adoption could hit roadblocks like regulatory challenges, technical issues, or even market hesitation. Finally, moving up the ladder, on top of today's list is Invesco Illyrian Galaxy Crypto Economy ETF with the ticker symbol SATO. If WGMI is like betting on the miners during a gold rush, then SATO is like betting on the entire gold rush economy. SATO doesn't just focus on cryptocurrencies or blockchain infrastructure. It casts a wide net across companies involved in blockchain development, digital payment systems, and the broader digital asset ecosystem. Think of it as an all-access pass to the crypto industry, giving you exposure to everything from the backbone infrastructure to cutting-edge innovation. This broad diversification makes SATO a more balanced option compared to narrowly focused ETFs like WGMI. Take its largest holding, the Invesco Crypto Cayman Fund, which makes up 13.91% of the portfolio. This actively managed fund provides dynamic exposure to crypto-related opportunities, acting as the cornerstone of SATO's strategy. Next is the Invesco Government and Agency portfolio at 13.28%, which brings liquidity and stability to the mix. Together, these holdings provide a strong foundation of active management and risk balancing. What really sets SATO apart, though, is its exposure to financial institutions and payment processors. With companies like PayPal Holdings, Block, and Visa, SATO taps into the traditional finance players that are actively adopting blockchain technology. It goes beyond crypto-first companies to include tech giants like Microsoft Corporation and NVIDIA Corporation, showcasing how blockchain is becoming an integral part of broader technology ecosystems. This diverse approach ensures you benefit not only from the rise of cryptocurrencies, but also from the wider adoption of blockchain across various industries. By spreading investments across a range of companies and sectors, SATO helps cushion the blow if cryptocurrency prices dip temporarily. Its exposure to financial services, technology, and infrastructure provides a safety net that helps stabilize returns when the market gets choppy. So let's talk numbers, because this is where SATO really stands out. Over the past year, this ETF delivered a 36.61% share price increase. What does that mean in dollars? If you had invested $100,000, your portfolio would now be worth $136,610, giving you a capital gain of $30,890. But wait, it gets even better. SATO also offers a 14.46% dividend yield. So that's an additional $14,460 in dividends on top of your capital gains. Combine the two, and you're looking at a total return of $45,350 in just 1 year. Want to invest in more dividend-focused ETFs? Click the video on the screen to see which ETF has the potential to pay over $300,000 in annual dividends.